But are we at a market peak? That's something that's really interesting and something we've been seeing more weakness across the board than we have in quite some time, probably not since October. There've been a couple little bites here and there this year, but they've never lasted more than 1 or 2 days. Now we're looking at about a week of weakness, and I'll just show you how that's all playing out. But it may be time to be cautious or certainly more attentive than we have been previously. So the long-term trend is still positive. You can see it kind of peaked up here. It was actually the 1st of April, and it's kind of been trailing sideways to down. We're still above the 21 day moving average, which is about a month, but it's come down right to it. So if it holds, then we're in a good place still. If it comes down to this 55, we're still actually okay long term. But if this starts breaking down, then I'm a little bit more concerned about the big picture. Everything we've seen seasonality wise, trend wise, I think we're in a good place. I'm not too concerned, but a good sized pullback is still very likely to happen, and we've been expecting that for months at this point. And the further we get stretched away from that, the more we expect a bigger pullback to happen fairly suddenly and out of nowhere. On our shorter term or midterm cycle, this is actually now down below 400. Anytime it's sub 200 here, the risk of a big sell-off becomes likely. It's very possible that we'll have a very quick sell-off like we did yesterday. Although it wasn't that big, it was 1 to 1.5%. That's not huge, because sometimes when you get down here in this negative 400, 500, you could have these 2, 3, 4, 5% days that are down. That gives back a lot very quickly. But for now, we're just here. We're down that 400, and we'll see where this goes. And the market is holding up today pretty well. So maybe it's nothing, but it's certainly something to be on guard about. Certainly more than when this is trending positively. And as I said last month, even though the market was going up the first half of this year, market money flow was not that big, like it was coming off of that lows in October. We had an explosive rally on this big data, this big plus 200 data for quite some time, lasting really into the new year. And then since then, it's just not been that strong. We've had these little dips of weakness, and not much has happened. But this is a bigger one, so I want to pay attention to that when that occurs. That's where we are. Next up is where we are relative strength-wise versus last month is up here, and here we are now. S&P is still stronger than the NASDAQ. Usually when the NASDAQ leads, and technology is leading, that's a strong economy. So S&P winning there is not a sign of strength. Next is large cap over small. Just worth noting where to be allocated. And we are still leaning into the large cap space, although we do like mid cap a little bit. But then NASDAQ is beating small, which means it's creeping up a little bit. That matches up with this growth versus value. I think it was yesterday, the day before, where growth went back stronger than value, at least on the two ETFs that we look at. There are a couple other metrics and ways that we look at it where value is still quite a bit stronger. So it's worth noting, but I don't know if that's a strong thing to look at just yet. Next up, the leveraged S&P versus NASDAQ. NASDAQ, the 3x NASDAQ versus the 1x NASDAQ is negative now. So that means possibly that the trend is negative on that index. So we did actually unload our NASDAQ positions about a week ago. So we don't have a lot of exposure there. We're still in the S&P and some of the NASDAQ. And actually, the other one that's very weak is the Dow. It looks very, very weak compared to all other indexes. So that's something to also pay attention to. And then our sectors, last month we were all positive, and now we've got 8 negative sectors. A lot of trends are negative. The MACDs are all pretty negative across the board there. And yeah, except for the only thing positive right there is energy, XLE. So that's really still the strong holdout, although I think it's down today. But materials and XLC is the communication. So that's like the Facebooks and those kind of. So that's really what's holding us up right now, but there's a lot of weakness in here. This is the T8 is a new metric that I have on this chart. It's based on the T line by Stephen Bigelow, who actually passed away last year, but I got to spend some time with him and learn how he thinks about things. And that's one of his favorite things. He called it the T line, was the 8-day moving average, just to give a sense of trend. So I threw it on here more of as a homage to him. But it's always also interesting to look. It's a very quick indicator. So there's a lot of negative on the very short-term trend. So it's really almost like a pre-heads up to my MACD versus the RSI to see where the strength is. But the only trends right now, energy has a positive trend confirmed. Consumer staples are actually weak, which is odd. Those are defensive. They should be holding up better in this kind of environment. And healthcare is weak. Those are the weakest that we're looking at. And financials are struggling as well. We thought they might have some hope, but maybe not. and we actually sold some of them yesterday. So as the rotation, this backs up a lot of that sectors. XLE, which is energy, is way off the top, up in the leading box. Of course, that's where the strength is. Here's the weakness. Real estate, XLRE, right in that middle there. We had a really ugly day yesterday. It's trying to bounce back, but it's not doing very well. Healthcare is there, but it might improve. And XLP might actually come. So we might see the defensive sectors come up and win first, but that also supports a further downturn in the market in the short term. So we'll see where these are, but I'd really love to see all of these move back into this weakening box and then give a good push up into improving, because that's really when you get a strong push of the market and you really get a good run from that. But at the moment, we're just kind of meandering and slowly weakening into here, with the exception of energy. And then to look at seasonality, the last couple of months I've been showing the seasonality of an election year, but I thought I'd revert to the last 10 years to see how it's a very different situation. I'll actually show you. That's election years. This is the last 10 years. So typically there's like a sideways to weakness all the way through May, and then you get a good jump. And that's not that different. We're expecting a jump late May on an election year into mid-June versus every year it's early May into early June. So that shift is something worth noting, but we could get a really good run that plays right into my rotation cycle that I'm looking at. If we get weakness, which would be fantastic into late April into May, that could be a really good chance to have a really good run here. But you want to play defense or start being very cautious right here going into that era. And I know Will is going to next talk about Japan. So I thought I'd throw up the chart on Japan, and it's had a great run, just like almost everything else has. As you can see here, we have orange bar. Now we have a red bar. That's showing weaknesses coming in. The Dow chart, for example, is like orange and red all the way through here. As you can see, when it turns orange and red, that's usually the beginning of a problem. Going back here, back in September and August, and then the blues and greens are when things are strong. So we have got weakness coming in there, and I'm seeing this across so many charts right now. Just more and more orange and red bars and saying weakness is here. Don't be too aggressive. And then finally, directional momentum here. We got the red is just peeking up over the blue. When the red it's really the sellers being in charge of the buyers. So if the red is on top, the sellers are really who's controlling this price right now. And they're trying. It's not super strong yet, but they are trying to break this out. If we see that red line shoot up anymore or the blue line come down, the buyers step aside and say, you guys take control, we could see a very big pullback in here. But yeah, just like everything else, we're seeing pretty broad weakness across the board. It started around April 1st. It very well could happen until mid-May, and then we could very well get a very good run off of that. So that's what I'm hoping for, and that's how we're playing it. So.